All right, folks, trust you're doing good, guys. I'm Optimist. So we'll be doing two things in this video. We'll be studying about FOMC, post FOMC trends, and then we'll also talk about possibility of NFP this week. And then I'm going to give you some kind of insight to what can happen tomorrow, NFP on gold. So the first thing I want you to know about me is that I am a kind of person I love studying. I love studying the market. So let's get to the charts. So this is gold chart. This is 4 hours, and then we are going to first go to Forex Factory to check the last FOMC release. We are going to talk about what happened afterwards. But first of all, let's start from the one that was released December 2025, and then we can come all the way down there. Do you understand? We can come all the way down there. So there was an FOMC release December, I think 9th or 10th. Yes, 10th. I remember so well. So this was it. And then it was released 8 p.m. So we are going to go to December 10th right here. And then we are going to study what happened afterwards. The trend. It's just a very quick study. The trend. And then I want to give you a very important verdict about gold, FOMC, and possibility of NFP. So what do you notice? This was where the news release happened this day. So the first thing you notice is that we actually grabbed liquidity and the news moved to the upside here. And then the following day we came back to retest this zone or this order block. And what do you notice? We created a trend. I always tell my guys, if you can study, if you can pay attention to the market, it's always repeating itself. So what do you notice? We created a new trend, a buy trend here, an uptrend, you can call it that. So that is the first one we have. So what about the second one? So we are going to just click on this and see the possible dates. Now we want it forward. How do we do that? Okay, we have to go back to the last one release and then we can go back from there. So let's click on this. So the last one that was released after December 10th happened on January 28th. So we are going to January 28th to study that. So this is January 28th, and then this was where the FOMC was actually released. What happened after that? You can see we first went up, and then the next thing is that we reversed back down. So did we create a new trend? Yes, we did. So in this scenario, you have to write it down. Okay, we did a counter trend after FOMC, but that was the deciding factor. I remember the news release that was the FOMC that was released far back in 2024. Let me see if I can get it. There was an FOMC that was released far back in 2024. I think it was March 21st. Yeah, March 20th. It happened just like this. That's just how you get it done. If you can put your mind to the whole news release and everything, you'll be able to get it right. That's just the truth. So the FOMC was released here actually, somewhere here. You can see how we rallied. And then the next thing that happened the following day was that we came all the way down. I got this sell, by the way. Yeah, because it was actually a counter trend. And but at the end of the day, you can see how we set a new trend. Yes, after that, we still set a new trend. So that's just it, just to give you a very quick understanding. So after the one on January 28th, the next one was March 18th. So what happened March 18th? Now we are going to the current 2026. So this was the one that was released March 18, and then you can see we created a lovely new trend to the downside. We continued the trend. So this one is continuation. That's just it. So nonetheless, that was still a trend, mind you. After a series of consolidation here, we're almost getting to the point. Don't worry, just be patient. The next one was April 29th. So what happened April 29th? So I remember this one so well. And this was the FOMC release down here. There was a break in market structure over the night. So I placed the limit and then I was able to get this buy. And then the following retracement back to this 4 hour order block, I was able to get it also. I was risking 2% on that trade. and I was only able to make about I think 2.5 RR, but nonetheless I was able to make I think $2,500. I'm going to attach the trades up there so yeah you can see. Yeah, I got it all the way from down here to this eye. So it's just about data. And then the following day, you can see we came down, grabbed certain liquidity, and then we continue the move to the upside. Now, I want you to take into consideration this is going to help us in our study for NFP. Because one thing about this month's price action, this one, and this current NFP that is about to be released is that both of them are actually doing the same thing. And then I'm going to show you the relationship there later on. And then the last one we want to talk about June 17th. No, that's not the last one. We still have the one of July. June 17th, I remember that trade so well. I made about, I think, $1,008 from it. Yeah, June 17th, that's July. June 17th. So this was it. And this was FOMC. Can you see? This was where it was released. We had market to the downside here. And then the following day we came to retest the change in the state of delivery right there. And then boom, a continuation trend all the way to the downside. And then the final one, which is the one that actually happened July. That one happened last week. Last week. And I got that trade. Just that it's fucked up. It reversed back on me. But the main thing is that this was where the news release was released. Yeah, this was the FOMC release. You can see how we grabbed liquidity, how we moved up. The following day we came back, and then I got an entry, and then we came back again just to have this move. Am I surprised about this move? No. I told my brother, I told him, you see, this trade is going to follow the one of December 10th. That's why I showed you the one of December so that you can see that the relationship that exists between both is almost the same. Can you see? This was the FOMC release. This was the Thursday that came back. I got the trade here. I took profit high up here, only for me to see that price continue going up. So what I was doing that week was that I did exactly the same thing. Exactly the same thing. I thought I made it full. Yeah, I could have sworn I made it full. Okay, when I wanted to go to Forex Factory. So yes, I did the same thing only for price to reverse back on me. Mitigated my trailing stops because I had a trailing stops. It mitigated my trailing stops somewhere here. But the thing is that it did not actually hit my SL because this was my entry point. Let me delete all drawings. This was my entry point right here. This was where my stops was, and then I was aiming for this eye because I had visualization it could take out all these eyes. So I was just aiming for this eye. Like, it's not that hard. So my trailing stop was down here, and then price came to kick it out, and nonetheless, it is what it is. So why am I showing you this? I'm trying to show you this to make you understand that your job as a forex trader is also the same as a data analyst. In fact, it will be perfect for you to go and learn data analysis also, combine it with your forex skills, and then trade very simple pairs, one, two at most, and then I'm going to make a separate video for that, and then trade that data. The secret of my profitability is because I've been doing it for a long time, 5 years, but my winning started the moment I took data very, very serious. I have a printer at home. I print all these things, I write it down, and then I take note of it. So now, the reason why I want to show you this in relation to the possibility of NFP is to show you what happened in May. And then you will see how beautiful, how perfect, and how what's the English word I will use now? How synonymous, yeah, almost alike both of them are. So the previous week in May we had FOMC somewhere here, down here, and then the market reversed to take out this low the new week. But nonetheless, a liquidity pool was involved and a liquidity grab was involved. So the next thing that happened was that Tuesday bought, and then just in the midnight on, yeah, let's just say Midnight Wednesday, we had a massive rally. Look at the massive rally. Wednesday, Thursday was just consolidating, and then we ended Thursday like that. Guess what? NFP was actually released afterwards. NFP was released this Friday. That was 8th of May. What happened with NFP? NFP rallied to the upside, mitigated this order block, and then delivered a lovely 2.5% trade. That is even, in fact, it would have been 4 hour. But because that day I was already in the trade, in the trade prior to NFP, so my stops was high up here, and then I closed profit the moment the market was, yeah, it was about 2 point something. I remember so well. And then the following week, guess what happened the following week? A liquidity pool was involved, just so that we can continue this big move. Now, what I've explained, I want you to now check it exactly here. NFP was released, FOMC rather was released here. And then what else? Can you see? We came, now this time around, we did not come for the previous weekly low, but we did come for at least a previous daily low. This was Thursday's low, this was Friday's low, and this was Monday's low. So Monday took out Friday, Friday took out Monday. Liquidity pools are involved. That has been checked. The last one is Wednesday night, midnight on Wednesday. Can you see how we had a massive rally to the upside? A massive rally to the upside. Then what else? This is currently Thursday. Thursday has not given us a clue on what is going to happen, but now you can now see that possibility exists that price can take out this high and move down, and then NFP can just come all the way here and then start selling, or it can do that just briefly and then from here takes out this high again and then have a massive sell to the downside. That is just what I want to show you. Data is very important, and this video is just about showing you the possibility of what can happen in NFP based on what has happened prior to FOMC and during FOMC. So that's just it. My goal is just to show you this and then to let you know that just be patient, study your patterns, study your data, then be patient and sit your hands to get the trade. This week now I've only gotten a trade this week, and let me quickly show you that before we end the video. I got this trade, this sell to this drawn liquidity, this previous daily low. How did it happen? It happened based on me understanding patterns. Just like how much I understand fundamental patterns, I have mastered sectional patterns too. How London relates with New York, how New York relates with London. Am I right all the time? No, but I make a lot of money also. That's just the truth. So I got this trade based on the simple principle of the fact that this happened to be a fair value gap. Yeah, this happened to be a fair value. Now let's do 15 minutes, please, so that I can show you what I'm trying to show you. Now, one of the things you will understand about this is that after we had this run above an old high, you will notice how we just mitigated that fair value gap here to continue selling. That was the same thing that happened here. Can you see? It's about pattern recognition. Your technical, whatever you're trying to do, is just about pattern recognition. And in 500 hours with Optimist, that is what I'm going to teach you. All my pattern recognition, everything, I'll be putting it down. So what do we have here? We have Asian session reading out this. So this was a liquidity grab. And as you can see, that is the liquidity grab there. So we had break in market structure. So what I did was optimal trade entry right here. And then I was ready to sell from here. This was my order block at that moment. That candle did not mitigate it. This one did not mitigate it. We didn't. So I was kind of not pained, but almost disappointed. But I held on to it because I believed in that trade. And I believe that New York Q zone, one thing I tell people about Q zone is that Q zone, according to the name, Michael G. Odison, you know Michael G. Odison is always this kind of guy that always love to give things name. So Q zone can always be, according to the word kill, to actually seek and destroy, to go for liquidity pools, get the liquidity pool, and reverse. That's what Q zone means. So Q zone is usually 1 hour prior to the session open and 1 hour during the session open. So If New York is supposed to start 12 p.m., 11, yeah, 12 p.m. Usually New York is usually 1 p.m., but let's say New York is 12 p.m. My kill zone is between 11 to 1. That's my kill zone. The liquidity taken there is very important. So look at it. 12:30. Now New York here starts 1. So look at it. This is 12 o'clock. And then during the kill zone, can you see how we rallied to run above all these highs? Can you see that? That's the kill zone. Now, the moment I saw that, I sold immediately because I was planning on selling initially, and this is where I plan on putting my stop loss. That is just based on pattern. There's nothing special about that trade. That is simply based on pattern. And where was my TP? All the way down here. And I got that trade right there. That's it. Pattern recognition. Now, there was a re-entry here. This was the fair value gap. Usually after that key zone, price usually come for this fair value gap, mitigate it, and that could have been your own re-entry, and then your stops can be somewhere high up here. Now you don't really want that fair value gap to be invalidated. Some people that have mind can put their stops high there. Yeah, some guys are so, I can't do that because I'll be like, what if price just wick through? I prefer to put my stops here and just, even if it's 3 hour out, take it and get out. That's it. And then you notice that it's almost the same here. After that liquidity pool, this is London kill zone. When London rallied, raided this high. Now, because there was no possibility of a sell prior, that's why I didn't get this aggressive sell. But after that, I recognized that as a kill zone. And the moment price was taking this out, and then we had a fair value gap, that's a sell. Just place your limit at that fair value gap. Now you can put your stops high up here, and then you can take part in all this move. And that's it. So everything is about pattern recognition. I hope with this video I've been able to show you that all you need. I hope in this video, I've been able to show you that all you need is data, study data, write it down, do what you can about data. Yeah, do all you can about data, and then at the end of the day, execute the plan. Create a plan from your data. So guys, I'll be hosting 500 hours with Optimist. It will start September 1st, and then it will be ending November 30. And all we'll be doing is just to study my simple pattern on gold and how you can actually repeat it over and over. So I hope you learned from these guys. Till next